We have Varun Daga, co-founder and fund manager at Girik Capital, now joining us to take some questions. Varun, great to have you with us here on CNBC TV18. As always, appreciate your time. What did you, first of all, make of the government coming in a way as promised, after 15 days, and take a relook and revising some of these windfall taxes lower? And what does that tell you about the intent here, if anything at all? And how are stocks, basically two large names, Reliance and ONGC, placed in that context, to your mind?
Thanks, Prashant, and good afternoon to all your viewers. I think government does what it does. We've seen a lot of times a government takes these actions and then reverses it. I guess, it was a reaction by the government because of high GRNs, but I think now that has come off, and probably it's good for some of these stocks because it's much better for them now, and I think that headwind which was there earlier is gone, and also they've clarified that companies with SEZ will not fall into it, so it's good for a company like Reliance. But anyways, I think what had happened is when some of these companies were making a lot of profits, most of the analysts, including us, we were not really building in a lot from that because I think the margins were super normal for a short period of time and it wouldn't last for very long. And I think in the overall scheme of things, when you take a 3 to 5 year view, I think these windfall gains or sudden losses, they don't really have that much impact on the stock prices over the long term. But yes, it does make the news and it impacts the short term. But I guess one needs to really understand what is the business can deliver over the long run.
Okay, we have Charandeep Singh also joining us now. Charandeep, good afternoon. Before we discuss, individual sort of sectoral and stock calls, in your multi-cap fund, I see that you have a lot of essentially large caps or largish mid caps. What's your view overall in terms of the mid and small caps? How would you approach them from here
on? Thanks for having me on your show. I think that, we're very stock specific bottom up people, and that's how we manage money. Yes, we do have certain limits and controls when it comes to having a balance in the portfolio of large, mid, and small. But, within those pockets, we are very stock specific. And we are continuously looking at opportunities. We're not averse to small caps at all. We've made lots of money in them in the past. It's just about finding the right story at the right price.
Okay, so let's discuss some ideas then, Charandeep. One of your large exposures is in Bharti. And that's been a very resilient stock. How have you seen the recent news flow of the Adani Group making that entry and now the earnest money and the fact that perhaps at least as of now that's not a threat? Do you think the outperformance of the stock can continue?
Look, there's one thing that we said again and again about the telecom sector. It's now a virtual duopoly, and for the whole sector, pricing should start moving in favor, as we've seen in the last 6 to 8 quarters. And I think once that happens, you should see acceleration in earnings. And, they're akin to growing utilities, wherein you're seeing the benefits of data being used in the country, but not really seeing the revenue realization of that data. And I think that story will continue to unfold over the next several years. Also, the abnormal amounts of capex, so the copious amount of capex that went in over the last 10 to 12 years, that's also more or less, going to sort of taper off, and you'll see lots more cash flow in the telecom sector.
Hi, good afternoon, gentlemen. I'm just looking at your portfolio from the last time we chatted. It appears ABP India, is that the new entrant out there, or you'll already had that and you'll have, increased weightage on that one?
Yeah, we have that in our portfolio.
But have you increased weightage out there? Because, it appears, at least that's the sense that you're getting if I just compare, the last chart with this one.
Yes.
Okay. All right. So tell us more about that theme then. That appears a theme where you're looking to play. You all believe that there is a revival on ground and things will look up from here?
No, I can take that. my sense or our sense rather is that, there are two thoughts that we have here. One is that you're seeing a revival on the ground now for quite some time in manufacturing. The so-called capex cycle that people talk about. I think it's well underway. There's a revival in manufacturing in India, and if you look at what's happened in over the last decade, you largely had lots of consumerism, and thus a lot of consumer stocks participate. Now you're seeing a lot of free cash flow sitting with corporates. The top 500 corporates in India are less leveraged than they've ever been. You're seeing the revival of a so-called capex cycle, largely on the manufacturing side. And I think as that continues to play out and momentum builds in the economy, you should hopefully see some disproportionate benefit go to the market leaders who supply the equipment to set up a factory. We think that theme should be decadal in nature, and it should play out quite well in the coming years.
Okay, all right, Charandeep, it appears that there are a couple of these so-called anti-ESG themes that have done well in this year. If I look at the top 5 gainers on the Nifty in 2022, ITC is in there, NTPC is in there, Coal India as well is in there. Those are the stocks that haven't created big wealth in the last 5 years, but 2022 has been the year for them. Valuation-wise attractive, dividend yield as well fairly good out there. Is this something that, in jittery times, you look at capital preservation as well as some kind of dividend yield? Your take on it?
We don't really look at dividend yield or low valuations and invest money. For us, valuations are functions of the earnings growth as much as they are of the headline valuation. We take both into consideration. What the future earnings growth can be in a stock, is something changing. So we don't really say, that whole talk of moving from growth to value or value to growth. We don't necessarily look at things like that. We generally look at a stock for a stock. We're looking at whether there can be surprise in the earnings growth, there can be some acceleration in the coming years. We're not really looking at safety. I mean, if we wanted safety, we would just be in cash. We're largely looking at earnings growth stories where there can be surprise elements to them, and hopefully that results in extra return coming in through multiple expansion over time as people notice those stories.
Okay,
and
now
consider it in their portfolio.
Sure. Varun, again, looking at your portfolio, the banking names are very interesting because you have ICICI, which is 5.2%, and a very oversized sort of bet on SBI. And this is something that I've noticed that, a lot of people are moving towards SBI and even moving money from the erstwhile outperformers of the last decade, HDFC Bank and Kotak Mahindra Bank. What sort of explains this oversized bet on names like SBI?
So, like Charandeep explained, we are always looking for earnings acceleration. I think what's happening, and I'll not go into a specific stock, but what we feel is that there is growth coming back in many of these names. And of course, SBI being one of the, well-governed PSU, in fact, one of the best PSUs, we feel that, the valuation gaps were very, very wide. And also the whole, with the capex cycle coming in, we feel that the loan growth could come in. So I think also we felt that, it was an under-owned stock for a very, very long time. Everybody disregarded it for a very long time. And I think that ownership could change, that money moving from over-owned to under-owned stocks. I think that's happening in the market as a theme.
Right. Charandeep, you own Blue Dart Express, which is, I guess, they've got a significant exposure to e-commerce as well. I was just looking at delivery, which is another large dependence on the e-com segment, which has been doing very well. Is this a bet on sort of e-commerce continuing to flourish big time here in the country, or is there more to it?
Yeah, so it's a great spot, and I think you're bang on that, partially bang on that e-com is definitely doing very well. So you remember now, I can't get into specific names, but if you look at logistics, the company you mentioned is into both the companies you mentioned are largely into what you call express logistics. So it's highly specialized logistics. It's not necessarily traditional trucking logistics or that kind of transportation of goods. It's express logistics, which is just-in-time goods, which is expensive in nature. These kind of logistics are very critical to especially large companies which rely on these names that you mentioned to get their goods out in time. That's close to 60% of their business. E-commerce logistics is maybe 30 to 40% of their business. It's getting a lot of attention because it's growing. And it's really grown in the last 3 or 4 years. And historically, the last 4 or 5 years, maybe that's been the only growth engine. But the rest of it's coming back. I can tell you, express logistics across B2B logistics is coming back. You're finding that as the economy is moving, as manufacturing is picking up, there's shortage of capacity across most of the country to move goods in and out quickly. So I think there's a tension and tightness in supply chains across the board. And hopefully express logistics companies, all of them benefit. The best ones obviously will benefit more.
Gentlemen, we'll leave it there today. Thanks a lot for joining us, and have a good evening. For now, we need to take a break. The market is once again making a leg higher. That's because of TCS. Just pull out the intraday chart of TCS. That's moved to high point of the day. And the bank nifty is off the highs, but the TCS stock has taken the nifty almost to the high point, along with some support from names like HDFC and even HDFC Bank for that matter. We'll come back from this break and we'll get you a dealing room check with Nimesh, of course, in D Street Chatter.